Good morning, good morning, good morning. Unfortunately, the weekend has already passed us by. It is Monday, the 6th of October. You join myself and Mr. Michael Brown for the Morning Blast, where we will be going through what happened on Friday, all the news from the weekend that's pertinent to markets, and a preview of what to look forward to today, and because it's Monday, the week ahead. But before we do, I will crack on with the legals. Nothing discussed on this podcast is trading or investment advice or infers any kind of endorsement by myself, PIQ, or indeed Mr. Michael Brown. Mr. Michael Brown, how are you, my dear friend?
Well, a very good morning to you, Ryan. Good morning, everyone. Apologies for any background noise at the start there. You caught me a little bit on the hop trying to find a meeting room, but I'm here. The new week is underway and we're firing on all cylinders, ready to go.
We are indeed. Well, I tell you what, as it was well received, the order of play on Friday, let us start with the new kind of layout. So starting off with some just a market pricing and technical analysis update via our dear friend Clive Lambert of Future Text. So I'll get that out of the way before you can crack on with the review of the news and the market moving news from the weekend and Friday. So start with Bund futures. They get gapped down this morning. Obviously, that's German government debt with a 128.61 now acting as a gap resistance. Everyone loves a good gap filling. DAX futures held 24,471 level that was mentioned Friday. Well, we mentioned Friday, keeping the bulls in charge. We saw new highs for the S&P on Friday, but then some selling left a shooting star reversal candle. There you go, on the daily chart. However, we're not getting any confirmation so far today. New highs in gold, again, silver too, hitting new 14-year highs and eyeing the 49.82 level. That's for silver, obviously. LME copper, remember there is a difference between where the copper is based. This is London copper, is thinking about its all-time high at 11,104 and 50 cents off solid gains on Friday. Bitcoin also joined the new all-time highs club party over the weekend. Oil benchmarks, they've kicked higher this morning after posting inverted hammer candles on Friday. And finally, the European gas and power markets have gapped up this morning, and the EUA carbon continues its recent solid gains, trading up to levels last seen in February. So most things seem to be near the highs. And there we go. Michael, over to you.
Indeed. Yeah. I mean, as you said, kind of, it feels like buy everything is kind of the vibe at the moment.
If in doubt, buy everything.
Yeah, absolutely. I am nowhere near as much of a technical analysis expert as Clive or frankly anyone else. But one thing I do know is that a very quick way to embark down the road to ruin is to start trying to pick tops in things when momentum is very, very strong and favours the upside. So if you are looking at equities or looking at gold or looking at anything that we just mentioned, really, then I think it's a kind of classic case of the trend is your friend as opposed to trying to fight that trend at this moment in time. But anyway, nothing on this programme is investment advice, and if you think it is, then please do go and give your head a wobble because we don't really know what we're talking about. Anyway, moving on, let's have a look at Friday. A question for you, actually, for all our listeners. Did anyone miss the US labour market report on Friday? Was anyone, feeling emotional that we didn't get that data? Because, personally speaking, I could quite get used to chilled Friday afternoons.
Well, that's because you were with me and Big Carl having a couple of pints. But, well, funny enough, as we commented on, whilst having a pint, at 1:30, which is obviously the UK time for NFP, the only people that we saw when we kind of quick scan of social media, yes, we are that boring when we have a pint, the only people we saw that actually gave a shit, or the only people that seemed to be worried about it, were journalists. Which I think kind of summed it up. Although you did scare the shit out of me at 1:32 when you went, "Oh shit!" and I did think that I'd missed something important, and then you reminded me it was NFP, and I was like, "Oh, okay."
Yeah, I also got a question about where the data was 50 minutes after the release, but I won't tell you who. It's rather embarrassing for all involved. But it wasn't either of us. Anyway, the data that we did get on Friday really centered around the latest ISM services PMI figures out of the States. That index dropped to 50 in September, down from a prior 52 in August, which is bang on the break-even mark between expansion and contraction. So not especially pretty. The details of that report, though, were mixed, let's say. Prices paid remained close to 70. New orders growth seemed to stall out in the month, but there was a sign that employment was contracting at a marginally slower pace. In any case, the market did not really bother to react to that data whatsoever, probably because everyone was in the pub with us, and it was a bit of a sort of glide into the weekend, with the FX market trading in very rudderless fashion, and equities also ending the day pretty much unchanged, as you alluded to earlier, Ryan. In terms of headlines, though, there have been quite a few, both on Friday and over the weekend. I may as well mention trade first of all. Firstly, Bloomberg citing sources noting that China have been pushing and trying to persuade President Trump to drop various curbs on trade. They are dangling the prospect of investment in the United States in an attempt to get the Trump administration to roll back various national security restrictions on deals involving Chinese investment in the United States. I think it may require a little bit more than that. Of course, this comes ahead of President Trump and President Xi being due to meet at the APEC summit a little bit later on this month. Sticking with China, they've also launched an investigation into the tariffs that Mexico has imposed on the nation. Of course, Mexico did this basically to kind of kneel down to President Trump and say, we're doing what you want us to do. China have, unsurprisingly, now turned around and gone, well, we're going to investigate you, and we might even retaliate at some point, which, let's be honest, is not a particularly shocking development. And lastly, on the trade front, one of the GOP senators, Marino, was talking towards the back end of last week, saying that President Trump is considering, I quote, significant tariff relief for US auto production. Of course, this also follows similar reporting last week that Trump is looking at tariff relief for farming and agriculture in the United States. Again, I'm not an expert on farming and agriculture. I'll leave that to Angie Setzer on the Grain Blast later on. But at first glance, this feels a bit mental to me. You put tariffs in place and then you throw around compensation to try and mitigate the effects of those tariffs. Maybe just don't do the tariffs in the first place. It would certainly cut down on the paperwork. Anyway, moving on from that, in terms of developments on Friday and over the weekend. Over the weekend, we obviously had the LDP leadership election in Japan, which is probably the biggest story from the weekend. A surprise result there with Takaichi being elected.
Someone's been practicing.
Mate, I was stood in the mirror at 4 a.m. this morning trying to get that one right.
Hey. Sorry.
She has been elected as the LDP leader, the first female leader of the LDP, and is going to become prime minister later this month. There needs to be a vote in the Japanese parliament before she can officially assume that post, but it is pretty much guaranteed she will. This is interesting because it is not the result that markets had been expecting, and I can't remember the name of the geezer that she beat now. I haven't been practicing that one. But Takaichi is very much in the mold of former Prime Minister Shinzo Abe, if anyone remembers him, favouring a significantly looser fiscal policy stance. Indeed, favouring a looser fiscal policy stance, and also very much against the Bank of Japan raising rates too much more or too quickly. One of her advisors was cited in a research note over the weekend. I think it was Credit Agricole put it out, saying something along the lines of she might accept another 25 basis point hike, but that's probably it. Given those two things combined, we have seen some fairly significant weakness coming into the yen in early trade this week, with dollar yen up by about 2% and trading north of the 150 mark. We've also seen a fairly chunky steepening of the JGB curve, which again is very much the reaction you would expect when she favours a much more dovish monetary backdrop and a much more expansionary fiscal backdrop. So we will see how that one develops. The other big story from over the weekend was the OPEC Plus meeting. OPEC Plus agreeing to an output hike of 137,000 barrels per day in the month to start from November. That is, of course, unchanged from the output hike that they delivered this month in October, and quite clearly way off the 500,000 barrel per day output hike that was being rumoured some stage last week. So maybe they were right to deny those reports after all. Crude benchmarks have bounced a little bit in early trade this morning. And the other bit of news from over the weekend is President Macron in France has appointed a new cabinet. In short, the new cabinet is basically the same as the old cabinet, which unsurprisingly has riled up all the opposition parties in France once again, basically saying, you are claiming you're going to change, you're claiming you want to work with us, but you've just appointed all the same old people to their old jobs or very similar jobs. The socialists in particular are up in arms about this. The reason I bring this up is because Prime Minister Le Cornu faces another confidence vote in the French Parliament this week. It seems pretty likely that vote is going to fail at this moment in time. If it does, then we're back with the same two choices. Either Macron can appoint a new PM and hope that they are able to work with the opposition parties, but given the various issues with the cabinet, that seems unlikely. Or Macron can decide to go for fresh elections. But when you look at the opinion polling, that seems unlikely to yield anything by way of clarity or a more efficient parliamentary makeup. So France remains, to coin a technical term, fucked, and it's absolutely no surprise that we've seen the OAT Bund spread widen out to its widest since January.
Close those spreads
this morning. Well, Lagarde might have to at this point. A few other bits and bobs from me, just before I hand back to you, Ryan, this morning. A couple of bits of news from here in the UK. I'll start with the good news, which is that Shawbrook, I guess they're a neobank or a unicorn or whatever you want to call them, they have formally announced their plans to float on the London Stock Exchange. Of course, this had been rumoured last week, but it is finally a bit of good news for the city, where, of course, listing volumes have seen the London market drop out of the top 20 IPO venues this year behind the frontier market of Oman. I will now move on to the bad news, which is that we have had further pre-budget rumours and trial balloons over the weekend. The most significant of these, coming via The Independent, citing sources at the Treasury, notes that Chancellor Rachel Reeves is considering a tax hike on the banks that could raise £2 billion. And £2 billion is quite literally a drop in the ocean compared to the £35 billion hole that needs to be filled. But nevertheless, Rachel Reeves reportedly considering either a hike in the existing bank surcharge, which currently stands at 3%, or an entirely new levy on bank profits. I will say two things on this. Firstly, this is quite a worrying precedent. It follows what happened with the oil and gas companies back during the pandemic, where effectively the messaging from the government, and of course that was a Conservative government at the time, is if you make quite a lot of profit, then we're going to end up putting a windfall tax in and taking some of that for ourselves. That seems to be what's happening with the banks, who are, of course, increasing their profits as a result of those interest rate rises we've seen in recent years. The second thing I would say, and I think I'm going to end up saying this a lot before the 26th of November, is you can cut spending as well. You don't need to keep raising taxes on everything. There are two sides to this ledger, but the Chancellor seems to be ignoring one of them entirely.
Well, this is the thing as well, right? Just, without us harking on about this too much, and this is something that our dear friend Helen Thomas said when basically, I think the day after the elections, when they got in with a massive majority, me and Helen were having a chat. And she said, you know what, one of the downfall for the Labour Party could be the majority is too big, because there's so many very, very, very left-wing MPs in the Labour Party that got elected that are now, part of this majority, that trying to get anything through that's, not socialist or not socialist doctrine would be very hard. And that seems to be exactly what we're seeing with what's happened. Starmer has tried to cut spending, the welfare bill, etc. And it just absolutely gets torpedoed and at this point, there's so many members of Parliament, Labour members of Parliament, that actually want to see Starmer fail, that they're almost voting against policies just to cause, aggro. It's a terrible state to be in.
Yeah, no, you're absolutely right, to be honest with you, and it doesn't seem like that's going to change anytime soon. And actually, going back to that welfare bill, that was the most telling thing when you had Labour MPs running round Parliament after that vote, and I think one of the most memorable lines was something along the lines of, this was an MP saying this, "I don't understand why voting this down means we have to hike taxes. It's only a few $1 billion quid." I mean,
cheers.
Come on, that basically sums it up, to be completely honest with you. But anyway, we've still got 8 weeks to go until the budget, God help us. A few bits of corporate news just before I hand back to you, Ryan. Boeing, according to sources cited by Bloomberg, they are looking to increase 737 MAX output as soon as October. Looks like things are taking off there. Rivian, the electric vehicle maker, they're going to have to redesign their door handles. Apparently their doors keep opening when people are driving cars along, which seems suboptimal to say the least. 3M, they are looking at selling billions of dollars of assets from various industrial operations. Basically, they're on a bit of an efficiency drive, trying to carve out areas of the business that aren't growing at all and focus on those that are. And last but by no means least, Meta and a company called Pembina, who I've never heard of. They have apparently neared a deal to build a data center in Alberta. And just forgive me for one brief moment, because I've been slightly distracted by a Bloomberg headline, but it looks like the French Prime Minister has just resigned.
What?
Yeah. Prime Minister Le Cornu offered his resignation on Monday to President Emmanuel Macron, who has accepted it. We have seen, of course, the CAC fall off a cliff after that. We also see the OAT Bund spread now rising north of 87 basis points.
Well, there you go. This is why it pays
let me just go and have a look at that while you do some other stuff.
Great stuff. This is why it pays to listen to us live. There you go. News as it happens. I'm
fucking shit show.
What a shit show. But anyway, whilst Michael scrambles to make sure that Pepperstone's still got money in the bank, I will crack on with the overnight news roundup courtesy of Zach. Obviously, do follow Zach and check our Substack to get this sent to your inbox or on Twitter, etc. But starting off with Japan, obviously, as Michael said, Sanae Takahashi I've been practicing as well. She won the ruling party leadership race. The implied probability of an October BOJ rate hike collapsed to 20% from 60% on Friday after this. As Michael said, she's very much in the Abenomics kind of school. Takahashi made clear the government will take the lead in setting fiscal and monetary policy, with her priority being to reflate demand of the broader economy. Goldman Sachs closed their short dollar-yen recommendation, seeing upside risk to forecast with scope for a quick 1.5 to 2% reset. Wall Street divided on yen trajectory. Easy for me to say. Deutsche Bank's new base case is for near-term losses in JPY towards 150, but not material weakness beyond. Citi, they argue that Takahashi reflationary policies will prove hard to implement, with the yen likely strengthening as the week progresses. Mizuho, the Japanese bank, sees the yen trading towards 150, but not much further amid US shutdown uncertainty and BOJ rate hike risk. And Japanese retail investors hold about $11.4 billion in yen shorts, plus $5.37 billion from leveraged funds betting on yen declines. It's as crowded as it has been since July 2024. Moving away from Japan, because obviously we've kind of covered all bases on that. Macro, Bitcoin breaks records as Trump reshapes messaging. Bitcoin hit a record high on Sunday above $125,000, surpassing its mid-August record of $124,480. Trump's advisors are counseling him to refine his economic messages with a pitch aimed at easing voter anxiety about weaker jobs growth and stubborn inflation. Their new mantra, quote, just wait until next year, unquote, with advisors, is painting a rosy outlook, insisting data will improve in Q1 2026. Trump will start mass federal worker layoffs if he decides shutdown negotiations with Democrats are absolutely going nowhere. So one to watch there. The European political chaos deepens. Well, you could say that because since printing this off, it's got even worse. Well, it did say about French's PM's slim chances of survival, but obviously they're very slim.
Do you know what? I just nipped back to my desk, as you know, and I had an email that I'd half typed to a journo before I jumped on this call, and the first sentence of it said PM Le Cornu's days might be numbered. Well, fucking numbered very low now.
Yeah, it's disappointing, isn't it? Because you kind of wish that kind of got these out just before.
Yeah. Could he not have waited a bit?
No, exactly that. Yeah, so obviously we've seen the CAC, we've seen the CAC drop sharply down like 2%, as Michael said, and, just want to keep an eye on. It's going to be a very, very fluid next couple of minutes. So it's pointless us talking about the French political system at the moment, so I'll quickly move on from that. Commodity markets surge on supply fears. Copper rose to more than 16-month highs on Monday, supported by supply concerns from the top producer in Chile. Weirdly on this, I remember reading off this headline about the mine shut in Chile about 2 weeks ago. And it was very much a slow bid that came into the market. So if you could have got on the back of that news, and it was very public, that basically output from the world's largest copper mine dropped 10% last month. Bit of a free trade there, which happens far too rarely for my liking. OPEC plus countries agreed Sunday to raise oil output in November by 137,000 barrels per day. Moving over to Thailand, they saw inflation dip below zero for the sixth straight month. That's also known as deflation, likely giving central bank impetus to cut rates this week. Sticking with the EMs, and now in that area of the world, Vietnam's economic growth accelerated at the fastest pace in 3 years in Q3, with manufacturing cushioning against higher August tariffs. Geopolitical news, China deepens Russian and Iranian ties. China is providing intelligence to both Russia and Iran, but to Russia is to better launch missile strikes inside Ukraine. That's according to a senior Ukrainian intelligence officer. China is also using a hidden funding conduit to pay Iran for oil, bypassing US sanctions. Up to $8.4 billion in oil payments flowed through the system last year to finance Chinese infrastructure projects in Iran via Sinosure and secretive entity Chuckson. Trump and Putin's offer of voluntarily maintaining limits on deployed strategic nuclear weapons, quote, sounds like a good idea. Yeah, no shit. Middle East and Asian tensions. Trump told Israel on Friday to immediately stop bombing Gaza after Hamas agreed to release hostages and accept some US plan terms, though vexing issues like disarmament appear to be unresolved. Moving over to North Korea, Kim Jong-un said Pyongyang has allocated strategic assets to respond to US military buildup in the south, vowing to develop additional military measures. Also, the US Senate Foreign Relations Committee chairman will introduce legislation to deter China aggression towards Taiwan by identifying targets for rapid economic measures. And just some equity news before I hand back to Michael. OpenAI's global fundraising blitz. OpenAI CEO Sam Altman embarked on a global fundraising initiative spanning East Asia and the Middle East, seeking financing and manufacturing partners. He held discussions since late September, in Taiwan, South Korea, and Japan with TSMC, Foxconn, Samsung, and SK Hynix to boost AI chip production and secure top priority AI orders. Trump administration officials, they discussed taking a stake in Critical Minerals Corp, giving Washington direct interest in largest rare earth project in Greenland. Manufacturing optimism, that is apparently building. Boeing is guiding suppliers that the 737 MAX output could reach 42 jet monthly tempo as early as October, highlighting growing optimism as it works to win regulatory approval. Foxconn reported record third quarter revenue on strong AI chip demand, or product demand, a bit more than just the chips, although it missed market forecasts and offered caution about exchange rates. Stellantis, the car giant, is planning to invest about $10 billion in US operations. Finally, for me, corporate challenges mount Chevron. They're going to make operational adjustments to its 285 barrel per day El Segundo refinery to meet Southern California fuel demands after Thursday's large fire. Aston Martin, big show favorite here for obvious reasons.
But not now.
Well, maybe not. Issued a profit warning citing US tariff impacts. German Defense Minister Pistorius called for a great state participation in defense industry to ensure jobs and expertise remain in the country. And that's it from me. Back to you in the studio.
Very good. Thank you, Ryan. Well, in terms of the week ahead, then, I think it's going to be unscheduled events that largely dominate proceedings, whether that be geopolitical developments, France descending into a complete shit show, more of, or any progress towards resolving the government shutdown in the United States, because the economic docket is quite a barren one. And of course, do bear in mind the ongoing US government shutdown means that numerous data releases are likely to be delayed or postponed until a later date. In terms of scheduled events this week, though, there isn't really a lot for market participants to be going on, at least not today. The data docket is completely barren. I'll just pick out a few sort of highlights for the remainder of the week. On the policy front, we do have a policy decision due from the Reserve Bank of New Zealand on Wednesday, who should deliver a 25 basis point cut, lowering rates to 2.75%. While this week also sees the release of minutes from the September FOMC meeting on Wednesday night and the September ECB meeting on Thursday afternoon. Besides that, we do have a fairly chunky week of Treasury supply with 3, 10 and 30-year auctions on Tuesday, Wednesday and Thursday, respectively. While, as I said, the data releases are pretty thin on the ground. Of course, we're meant to get the weekly US jobless claims stats on Thursday, but we won't get them because of the government shutdown. On Friday, we will get the latest Canadian employment data and preliminary consumer sentiment numbers from the University of Michigan for October. Though do bear in mind, of course, given the government shutdown, you would expect consumer sentiment would fall rather significantly, and you would also expect further political divergence in the sub-indices of that data as well. But really, that is all there is of note this week. And as I said, it's going to be those slightly unpredictable and unscheduled developments that largely steal the market's attention.
Absolutely. And no better time to be following at PIQ Newswire on Twitter and also using the PIQ mobile site, etc., in the platform. But Michael, thank you so much as always. I'm glad you had a good weekend. We had a good time on Friday, which is nice. Just a friendly reminder, I am flying to Viva Las Vegas tomorrow, so no shows. Actually, potentially could do a morning blast. I'll find out later on exactly what my movements are. But yeah, so from me and Michael, we all trust you had a great weekend and we hope you have a profitable week. But from us until tomorrow or maybe Wednesday, bye for now.